Yesterday, although the European Central Bank raised the main refinancing rate to 4.5% and the deposit facility rate to 4%, the euro plunged. This is due to a downward revision to the Eurozone economic growth forecast for 2024, which tempered investor optimism. Then, traders received strong data from the United States. Retail sales climbed by 0.6% in August, above economists' estimates, suggesting a 0.1% increase. The news fueled demand for the greenback as that raised expectations that the Federal Reserve would lift interest rates by a quarter point next week. Interestingly, the Fed is likely to raise rates when the U.S. economy is rather stable. Second quarter GDP data proved to be upbeat, with the labor market remaining resilient. All this allows the central bank to keep monetary policy tight to combat inflation. Speaking of the euro area, the situation is the opposite. The European economy is in the doldrums, while further rate hikes increases the risk of a deeper economic downturn. Against this background, traders continued to buy the US dollar, getting rid of both the euro and the British pound. Before we get into technical analysis, let's take a look at today's macroeconomic calendar. It includes data on consumer prices in France and Italy. Economists forecast a slight increase in price pressures in these countries. In addition, the Eurogroup of finance ministers is set to meet today. Traders may take notice of a speech by ECB President Christine Lagarde. Notably, she noted yesterday that the regulator intends to step up efforts to lower inflation, especially amid a recent rise in energy prices. Furthermore, it is worth paying attention to U.S. statistics. U.S. industrial production is expected to rise by 0.1% in August. If the reading is above analysts' forecasts, the euro and the British pound will most likely extend weakness. What's more, the University of Michigan will report its indices on consumer sentiment and inflation expectations. The indicators are forecast to remain almost unchanged, which may push the greenback further up. From a technical point of view, bulls may try to trim some of yesterday's losses. According to the 1-hour euro-American dollar chart, a breakout of 1.0674 will pave the way for a greater upward move to 1.0711. At this level, I recommend going short on a rebound to catch an intraday correction of 30-35 pips. Short positions at 1.0674 can be considered only amid a false breakout. Alternatively, going short will be relevant if the price fixes below 1.0633. In this case, the euro will probably dip to 1.0595 and 1.0554. At these marks, it will be possible to go long on a rebound, counting on an intraday correction of 30-35 pips. Long positions can be also opened amid a false breakout at 1.0633. Thus, the euro will have a chance of entering a bullish correction to 1.0674. If the price breaks through and consolidates above this level, the euro will likely surge to 1.0711. As for the British pound, the situation is similar. A false breakout at 1.24 will create a sell signal, thus bringing the currency back down to 1.2395. If the price breaks below this level, sterling will most likely dive to 1.2369 and 1.2340. At these marks, traders are recommended to go long on a rebound. In the event of bears' subdued activity at 1.2441, its breakout will push the price up to 1.2478. At this level, it would be a wise decision to go short on a rebound in the hope of an intraday correction of 30-35 pips. Long positions against the trend can be considered only amid a false breakout at 1.2395 and 1.2369, or on a rebound at 1.2340. Good luck and have a great weekend.